Need to get some more perspective on the Kenyan market, where that market yesterday was under pressure again, down 30.66 points to close at 3,072.38. That's on the NSE 20. We're now joined on the line from Nairobi by Samora Kariuki. He's an analyst at NIC Securities. Samora, I think the question that we ought to be asking here is, how low can you go?
I think it depends on a number of factors. You know, in December, you usually see a lot of retail investors selling off, liquidating their portfolios. And there's also the fact that some fund managers could be closing their books for the year. So I think there's still some more selling pressure on the market, and it could go further. Because remember, the last time there was a global recession in 2009.
Yeah, go on.
Yeah, the last time there was a recession in 2009, we saw the index touching 2,900 and even below 2,500. So there's still more selling pressure.
Yeah. Can I put you on the spot and ask you perhaps to give us a figure in terms of what percentage downside-wise you see before we see some kind of stabilization and perhaps a retracement of some of the losses that we've been seeing so far?
I think it's an extremely difficult task to give a percentage, because there are a number of activities, a number of variables that are unknown at the moment. For one, we don't know, at least with any certainty, what's going to happen to the Eurozone next year, and that could be a key factor. So I think it's really hard to tell when the market will have bottomed out and by how much further it can go down. Yeah,
but Samora, I suppose on the other hand as well, when you're making that call, you have to be considering the fact that on the other hand, you've got the central bank that's been raising rate, and is perhaps part of the reason why this market has been under so much pressure. So you should be calling, on the other hand, just how far the central bank will raise rates before we see perhaps them cutting and then perhaps reducing the interest that we're seeing on the fixed income side onto the equity side.
With regards to the rates, I think we could be reaching the peak of interest rates in the cycle, and we could be going, I think 2012 would be more about rate cuts than increasing the interest rates.
Right.
So I think from that perspective, I think we could be reaching the peak of the rate cycle, but we don't know how long this plateau will last. Maybe into Q1 and beginning of Q2 next year is when we could start seeing interest rates come down, because I don't think the current interest rates will be conducive for growth next year, and that will be a key factor going into an election.
Absolutely. And let's hope that the central bank is not put under pressure to increase, to reduce those rates prematurely. Let's talk about some of the headlines that have been coming out of Kenya. We had Standard Chartered today in the Business Daily talking about potentially going back to shareholders and raising capital. Now, this is a company that just last year raised 2.5 billion shillings from investors, and they used this to buy Barclays Bank as a custodial business in Africa. Yeah. Do you think this will be a popular cash call at this time?
I think so. I mean, they have 72% anchor shareholding from Standard Chartered Bank PLC. So at least from that perspective, you are assured of at least a 72% subscription rate. And a number of investors want to be exposed to the Kenyan banking space, and I think it would be a good call. The thing with Standard Chartered is that they have grown aggressively over the last year. I think growing their loan book by something like 71% year on year. And I think when your loan book is growing that fast, there's obviously going to be some pressure on your capital adequacy ratios, and that's why you're seeing them coming to the market next year. But I think it will be taken up well next year if they are to come to the market.
Yeah, you're absolutely right. Business Daily does make the case that the bank's capital to equity, to assets ratio has been eroded by the aggressive growth in that deposit as well as loan book. But what would be your call then to investors? Would you encourage investors to follow their rights if it can?
I think so, because the good thing with Standard Chartered Bank is that they've got a long history of banking in Africa, I think over 100 years now. And they have got their core competencies in banking, in the wholesale market as well as in the consumer market. So it's a well-run organization, and I think they've got the capacity to handle the growth in their loan books. Because, I mean, for one thing, financial inclusion in Kenya is around 50–55%. So there's still room for growth in the banking sector if you look at account holders as a percentage of the population. So I think there's still room for growth for the banking sector in Kenya.
Indeed. Let's talk now about something that's going to be extremely popular in Kenya at this time of the year. It's SAB coming aggressively into that market. So I'd imagine there's going to be price war here in terms of pricing of the beers and the ciders and all those other things that make the holidays go extremely well. So you tell me, who's going to win this war? Who's going to be hurt here?
I think, first of all, right now it's more of a battle. I think the war is going to be fought out over many years. Right now the battle is, I think EABL hold the majority of the cards. They've got the brand name, they've got the distribution systems in Kenya. And I think at the moment, SAB Miller is just trying to get into the market. So I don't think at the moment it's more of a battle for consumers in the short term. I think in the long term, I think Kenya has got the capacity to handle 2 large beer makers. If you look at what's happening in the East African community, this community has got over 140 million people, and it's growing. Yeah. And it's a huge market for the 2 of those beer makers, and that's why you're seeing a number of multinationals coming to Kenya. So I think at the moment it's a battle that EABL holds the major of the cards, and the war will be fought over a 10-year, 20-year horizon. Yeah, it's a second bite of the cherry, isn't it, for SAB Miller, because we do know they were there in 2002 and they shut down and they got out. They are bringing in the Miller brand Genuine Draft. Is that one beer that you have tried? I haven't yet tried it, but I'll give it a try for this festive period.